When was the last time you bought near the top or sold near the bottom? If you are totally honest, it was probably recently. But what if I told you that every market cycle actually follows the same emotional pattern? And once you see this pattern, it's very hard to unsee it. So guys, stick around because this can change everything. But right, so before we can take a look at the emotions of the market cycle, we of course first need to learn about what is a market cycle in the first place. And in simple terms, a market cycle is the repeating pattern, as we mentioned in the intro, of rising, peaking, falling, and bottoming asset prices. So a market cycle you will find in crypto, you will find it in Forex, you will find it in stock markets, and it's basically the cycle that goes between the very lows and the very highs. And we do have some different theories of market cycles, and don't worry, I will talk about a few in this video. But the general principle here is that the cycles are mainly driven by human emotion, economic trends, and also institutional behavior, or in other words, the behavior of smart money. And I do have lots of videos on of smart money right here on YouTube, so you can feel free to check it out after this video. But here it happens across all markets. This one I already said, crypto, stocks, Forex, and even more interesting, and this you might feel a bit counterintuitive, is that you will find market cycles on multiple time frames too. So most people only think that the market cycles are only available when you zoom out a lot, but you will actually find these sort of small cycles within the cycle themselves. That's very interesting. And here, recognizing these cycles can help both traders, but also of course investors, from avoiding buying high, or in other words, the euphoric phase, and selling low in panic. One of the biggest mistakes traders makes is to sell in panic. And if you want to, guys, let me know down in the comments if you have ever sold because you got scared, and if you ever sold and didn't stick to your plan. It would be interesting to hear about that. But now you might of course wonder, why do market cycle matters for traders? Well, market cycles matters because it helps you understand the bigger picture, and as I briefly mentioned, it also avoids making many of these emotional mistakes, like for example selling in panic. And here, most people lose money by buying, either late in bull markets or panicking in bear markets. When we see massive sell-offs, like for example, we saw recently with the whole Trump tariffs thing, or what we saw during COVID, we can actually see that when the markets sell off a lot, we also see a big increase in volume, meaning that more people that maybe never even touch their account are actually more likely to sell in these times. So here, knowing where we are in the cycle improves timing, risk management, and decision making, and it can encourage long-term thinking and also strategic action. But right, guys, so now let's take a look at a super interesting chart. This chart is called the psychology of a market cycle, and you might actually have seen this chart before. It's from a site called wallstreetcheatsheet.com. So big shout out to the creator of this chart. I really like this chart because I think it gives you a good sort of understanding of this whole cycle. So what is important is that here you can see the price. You can see this right here is the price, but it's not something you have to memorize, like the price need to look exactly like this in order for the chart to be valid. No, that's absolutely not the case. This is what is known as a schematic. So this is just an example, but the important thing here is to understand in what phase we are in. So now let's actually take a short look at the different phases. So the rallies usually start with something we call disbelief. I'm not sure if you can see the text clearly. I can see it pretty clearly, but I hope you guys can see it as well. But the big rallies tend to start when people have the mindset of thinking like, you know, this rally will fail like all other rallies. This is just another fake out. This is how the biggest bull markets tend to begin. When we break out from to form slightly new highs, we start to see some hope. People start to think that recovery is possible. Then the price usually grinds a bit higher, and this is where the optimism starts. People start to think that, I mean, this rally is actually real. We're actually doing it. Then comes the belief. It's now time. Now people are starting to get all in. You know, if you think about Bitcoin, this might be the time when people that are, you know, only have a little bit of Bitcoin says, nah, fuck it, I'm going all in. I'm buying, you know, 100% exposure in Bitcoin. Then of the belief, it starts to get wild. This is the thrill phase. Here is when people start to use margin. People start to borrow money or using leverage to buy more than 100% of their position. This is at this point the prices can really increase fast, and it's very exciting and fun to be in. By the way, if you want to learn more about leverage, I do have a full video about that, and I'll make sure to link the video both in the video card and the description below. But now, after the thrill phase comes the euphoria phase, and this is the phase where you will hear things like, you know, I am a genius, I beat the market can't do anything, I'm unstoppable, we are all going to get rich. This, guys, when you hear everyone talking about a market, maybe you hear your, you know, taxi driver recommending a stock, or, you know, everyone is talking about something. Maybe you remember the NFT era where everyone was like, you know, we're all gonna get rich on NFTs. This is usually where it all starts to crash. Here we usually see a sharp drop from euphoria, but then we usually see a bounce, and this is the complacency. This is when people start to say, you know, we just need to cool off, we need to prepare here, we're gonna get the next big rally to the upside. But then instead of getting a rally, we get the next leg down. And this is actually interesting from both a psychological perspective, but also from a more technical analysis and market structure perspective, because this is where we usually see a change of character, right? This is when we break the last low of the uptrend. And if you want to learn more about smart money concepts and market structure, I do have a full 2-hour long course right here on YouTube. I'll make sure to link it in the video card and the description. I highly recommend to check that one out if you are a trader. But after this break, after this change of character, we usually start to see some anxiety. People are wondering, why am I getting margin calls? This dip is much longer than expected. You know, maybe it's actually over. After this, we're starting to see some denial. You know, people think, you know, my investments they have good fundamentals. They will always come back. They will eventually they will make a new all-time high. Then shit's hit the fan, and this is the panic phase. People are wondering, you know, why is everyone selling? The fundamentals are good, you know, why is everyone selling? And this is where, you know, many people thinks, I need to get out. I just can't take it anymore. You know, the emotions, I can't handle my emotions. Then we come to the capitulation. This is when people think, you know, I'm getting 100% out of the market. I'm never touching this again. If it was crypto, I'm never touching crypto again. Crypto is a scam. You know, I can't afford to lose more. After this, it started to get a little bit violent. People are starting to get angry. You know, people start to blame others. You know, who is behind this rally? It has to be some conspiracy. You know, who shorted the market? Someone is manipulating the market. Was this the government? You know, who allowed this to happen? People are starting to get real angry. And after this phase, we have the saddest phase of them all, which is the depression, which is, you know, I have lost my money. How can I, you know, I'm in a very bad spot. I lost everything. I got too caught up in the euphoria. And the sort of a bit sad thing here is that when people are depressed and completely lost here, this is usually the best time to buy, because you can see that the depression phase is at the very low. And then what you can see is that the disbelief starts once again. and now we are at stage 1 in the cycle. So this whole cycle is the as I said, it's not a perfect, this is not what will happen anytime, but hopefully you guys learned some, really useful things to you can use this schematic to maybe, assess how are people talking about this on social media, or even how are people, in the public talking about, for example, the crypto industry. I think the crypto is such a great example because crypto has gone through many of these booms and bust cycles. But right, so now I want to switch the attention a little bit and show you guys a tool that I really like to use to sort of gauge where we are in the market cycle, or at least to understand how greedy or how fearful is the market right now. And this is to analyze the VIX index. And to do this, I'm using TradingView. As you know, if you have been following the channel, I use TradingView for pretty much all my analysis, both technical analysis and fundamental analysis. And if you want to get started with TradingView and get 30 days TradingView Premium for free, and you will also get a $15 bonus, I do have a special link to TradingView, and I will have that link in the description below and the top comment. But here, I don't have time to go super deep into the VIX index, but in general, you can think about it as that the higher the VIX, the more fear we have in the market. So you can, for example, say that this recent spike right here, this massive spike, maybe you can guess, when did this spike happen? Well, it happened during the whole tariff drama, Trump's Liberation Day and everything like that. And it spiked to above 50. And historically, when VIX is above 50, this actually tends to be a great buying signal. And I talk about that. I do have a video about the VIX index, and I'll make sure to link that video both in the video card and the description below. But I can also show you here. If we scroll out a bit more, I want to show you a massive spike in VIX. And once again, you guys can guess, when was this massive spike? When was a time that many people were fearful? And when was a time where it was a super good buying opportunity? Well, this was the COVID crash. So the VIX is one of many indicators that I really like to determine, how greedy, how fearful are people right now. But right, guys, so this video is getting a bit long, so I will actually wrap up soon. But we do have, I actually only covered one of five slides in this video, but I will make sure to post this whole course for our YouTube channel members. If you didn't know, we have a small but growing community right here on YouTube, where I post things like exclusive videos, guides like this one right here, also some trading tools, and some members only post and some good stuff. So if you are really serious about trading, technical analysis, and even investing and so on and so on, please consider becoming a channel member by clicking join down below. And now, guys, one thing I didn't have time talking about in this video was actually another framework called Wyckoff's market cycles. So if you have time, I actually highly recommend to check out this full course on Wyckoff theory next.